Good evening, everyone. This is Dr. Dan with iFund Traders. This evening is Thursday, December 9th, and I would like to walk you through the trade of the day. We're going to be reviewing the morning activity this morning on the SPYs. We had a gap up this morning that during the pre-market session, we talked about the fact that 124 was going to be a key number for the SPY since there was a challenge of that number a few days ago when it got sold off fairly well from that point. So this morning, as we were opening near that number, what we were looking for was either a solid green bar to move through 124, close, and then trade above that high, or what we got in this case was a poke through and then a red bar closing below that whole number. And once the low was violated of the opening 5-minute bar, we talked about looking for a buy opportunity on a 1/3 to 1/2 retracement. And then if that buy opportunity could not take out that opening high, we would look for a backing and filling type approach where we would start to roll over and challenge the next support level and then eventually work our way down towards a gap fill. And if we ultimately got the gap fill, we were going to look to play the market long off of the gap fill. So that was the overall plan, and I'd like to walk you through how this actually unfolded throughout the morning. Now, before we get started, you can see this black line I've drawn across the bottom section of the chart. That was to indicate where the prior day's closing price was, which was at 123.28. And prior day's close becomes an important price whenever you have a gap. People are looking to see if the gap is going to fill. There's a highly anticipated support or resistance in that area. If that number were to be taken out and price were to get trapped under it, it now turns into a resistance point. If price comes down, hits that and holds, it becomes a support area and you would look for a move off of it. So that's what the black line represents. We have the opening bar. If we take out the low, we've already said we expected it to begin to fall. So let's walk this through bar by bar here and take a look at how the action played out. Okay, so we take out the low and then we drop a little bit more than a third, almost halfway back, and we get the first green bar, kind of a neutral bar. And if we trade above that high, we're going to look for that move back up. Now, we said earlier in the pre-market session, and I just went over it with you again, that if we do not take out that opening 5-minute high, we set an equal or lower high, we're actually going to look for this to roll over and challenge the next support area. Well, the next support area is going to be the short-term moving averages. So as this begins to trigger, I personally did not play this in the market this morning. Some of the traders did, but I wanted to wait and see because it was such a fairly good sized gap up and 124 was such a strong number. I wanted to see if we could actually take that out or if we were going to fail. Okay, now once we triggered and we came over the green bars high, you can see there was a move back up into the 124 area and it left behind a decent looking topping tail. There was just no conviction after the one green bar. The 8MA is in check. It held it intact, but we were unable to clear the key resistance area. So now if the low of the topping tail bar is taken out, you're going to expect a move down towards the 8. And then if the 8 breaks, you're going to expect the move down back towards that 20 period moving average. So there is a fairly good drop that can be had. Now there is a pivot that was set. So a peak through the 8MA that touches the pivot and bounces, then we're putting in a sideways range off of a gap up and we'd have a different approach. But the anticipation was if the 8MA gives way, the pivot's not going to hold and we're going to come down towards the 20 period moving average. So at this point, any longs, the stops were tightened up. And if you were looking to fade or short something, this was a key time to look to put the short on. So let's go to the next step here and see what happened. Okay, so here's the red bar breaking the low, and you can see the 8MA is right there. So if we come down through this 8, chances are we're going to break the pivot and come right down to the 20MA. Okay, so that's exactly what we got. The 8MA breaks, price moves all the way down to the 20MA. Now understand, guys, this was called step by step, in the room in real time. You're just seeing the summary review, but these are the kind of things that we look for throughout the trading day to give our traders a heads up on the anticipated move. Now from here, if we take out this red bar's high, we're going to expect a buy setup to trigger, and it was called that if the buy setup does not get back through the prior pivot low that was just broken and does not get back through the 8MA, in other words, the 8MA hooks over and it traps price on this bounce, then this buy setup is going to fail off the 20, and we are going to break pivot and finally come in for that gap fill. And at that point is when I'm going to play the market long. So this was the current bar in this time of day when I was looking to play the market long, not now, but on a gap fill. All right, but this is what I mean when I tell my traders you need to learn to read the market like a chess player. Okay, you don't want to play checkers where you're looking one move and one square at a time. You want to be playing chess 5 to 7 moves ahead. So we're already anticipating how the pattern should play out if it's going to complete. So we get a green bar reversal, we hit the 8MA, the 8MA rejects it, we break the pivot, we fall into prior day's close, and then we look for some kind of buy opportunity if we're going to play long. Now, if you're looking to play short, you'll take the failed buy opportunity and you'll short it down to the support area. Okay? All right, next bar. Okay, so we do get a green bar at the 20, and we get a trigger with another green bar coming over the high. Now you see the 8MA is coming down on top of us. If we cannot break the pivot to the left that we set at the third bar of the morning, and we cannot break the 8MA, we're probably going to fail on this, break the 20, and come into the gap fill. Okay, here's our red bar off the 8MA. So the buy setup has very little follow through. Here's the hard red bar down, and it's setting up nicely here. Some traders took advantage of this and they went short, and the rest that wanted to play long off of the fill were just biding our time and waiting for this. So you understand you can be playing both sides. Okay, you can be playing these failed buys, looking for the short opportunity, or you can just let the market unwind and come into the key area that you feel comfortable playing and execute your plan that you laid out at the start of the day. All right, so from here we'll go to the next bar. Okay, so we have the failed pivot, and we're almost near the prior day's close. Now remember, the price was 123.28. Now with this being a 3-bar drop, and we've already had 2 failed buy setups that we expected. Now remember, at the start of the trade, we expected this kind of price action if we were unable to hold the gap. And in this area is where I'm going to look to put on the long trade. Now I am going to play an anticipated trade. I'm actually going to be buying at the support instead of waiting for the trigger. When you do that, you have to have some pre-calculated stop. Now the red line that you're looking at is the 200 period moving average, which also can be a very strong support area, especially when price is coming at it from far away. Well, if you look at where we gapped up this morning, we're falling all the way back down towards the 200. 20 MA still going up. We're not in a downtrend with the MAs. Price is coming in pretty hard, expecting support. Now, it's not a guarantee, but it's a high probability trade. So near prior day's close and near the 200 period moving average, I'm willing to put some bids out there and get a little bit of a position going and then use a stop of a set amount. Now in this instance, I was willing to let it trade through prior day's close near that 200 and try to get some shares accumulated between the 123.35 and 123.25 area, playing that 10-cent range and then using a 10-cent stop. If we break below 123.15, just take the trade off and see if we come down and test the whole number. All right, so at this point, that's the anticipation, and that's where I'm going to start putting the bids out there. Okay, so this first bottoming tail that forms comes right down through the prior day's close, hits, I believe it was 27 on the low, and I had a bid out at 32 for 1,000 shares, all right, to get started. I want to test it, put it a little bit ahead of the close on the first drop in case it doesn't quite fill it to the number. Better chance of getting picked up. You can always bid a little bit above, a little bit below, but it was just the first test just to see how easily it got filled, how fast it went through, and it went right through, tagged prior day's close by a penny, and starts to put in the bottoming tail. Now, if from here we take out the high on the next bar, that's your opportunity to add whatever shares you didn't get filled or whatever position you want to build, and you put a stop underneath the tail. Now in this case, because it's so close to the 200 MA, I would actually go a couple of pennies underneath and let that support get tested if it's going to happen on the next bar. Now in the video I did the other day, and please go back and watch it if you have not, it's on UAL and repeating patterns. And in that video I talk about bottoming tails often get retested, and that's okay, especially when they're retested on the very next bar. So in this instance, I'm either A, going to buy over this bar's high to add some more shares, or B, if I get an immediate retest, I'm going to bid near the low of that bottoming tail. And because I have support right underneath, all right, I have the prior day's close, the 200 period moving average, and the bottoming tail price. That's not where I want to get stopped out. All right, I want to go below that. I told you 123.15 or 14, somewhere in there. Give this thing a little bit of wiggle room. Now we're on a 4-bar drop, so if the next bar retests and breaks by a few pennies, that's actually, to me, an area to add because everybody else is going to get stopped out. Everybody else just put their stops under that low, but there's a lot of support there. It has not broken support yet. So here's where I'm actually looking to either add over the top or on a retest of that tail. Okay, now you can see what happened is we got a retest of the tail and it broke slightly. I think it was 1 or 2 pennies underneath the low, almost hits the 200, and again puts in the bottoming tail and goes green. Now at this point, you can see that you've tested that area twice. You should either have the position you want or you're going to add a little bit more if this high is taken out. And if you have the shares you want, then you're good. You let the trade run, put your stop. Usually I'll tell traders a couple pennies right under the low. In this case, because you have 2 tails and the 200, I would give it a little leeway. I wouldn't want to get 1 penny stop out on that trade right off the 200, and I wouldn't want 1 or 2 pennies under the 200. So I would give myself a little cushion, and you got to play that way. So based on your share size, allow yourself that 7 or 10 cent stop so that you don't get wiggled out in such a strong area of support. So those are the 2 areas I was looking to bid. Now understand, I was anticipating support. If you do that, you have to know when to cut the trade because you haven't seen if it's going to bounce. You know there's a high probability that you're going to get it. So you either play in the area in anticipation with a preset stop, or you let these bars form, and once the high is taken out, you enter, and then you use the lows that you see have verified support for the time being, and that becomes your stop. Okay, so guys, here's the trade log, and you can see that the first red bar tail that went down, that's when I had the bids. That was the 1050 to 1055 bar, and you can see the bids I had out there at 123.32. That was the first 1,000 shares. 1051 got picked up, and then that second bottoming tail is the 1055 through 11 o'clock bar, and that's where I was either looking for the high of the prior red bar to be taken out or the low, the tail, to be retested. And I went right below the prior day's close by a penny, put out a couple thousand shares, got picked up. I think the low of that was actually 25 on the dip, and then came back up. So at this point, just shy of 5,000, 4,500 shares maybe, just shy of 5,000. Was trying to get 5,000 on this first piece of the trade, and now the stop is going to be, at 15. If it breaks down from here, we got to cut it loose. And if it comes over this high, you're going to add back whatever shares or whatever position size you want, and you put a stop a few pennies underneath that support area. Okay, now you can see here we got the follow through. 4 bars up. We talk about 3 to 5 bar moves all the time. We're 4 bars up. We hit the 20. We hit our target. The 20's rolling over, and that's a nice little scalp move. And it's 30 cents. It's not a home run, but it was never intended to be. Okay, so that was the morning call pre-market this morning. Pretty much played out ABC right according to plan. But I want you to see the 2 failures prior, how they were discussed before we even opened. We had an idea in mind. If this is going to fill, here's a pretty good chance of how and when it's going to do it. So as it plays out as you expect, you get more confidence in actually taking your entries when they show up. Okay, I hope you enjoyed the Trade of the Day review, and we'll look forward to talking to you in the next lesson. Take care.